Stablecoins.
Hi, everyone. I'm Kayla. I just thought I'd say hello before we pop over and share the screen here, but let's go because we got a lot to cover. It's always nice to start the first slide. So first of all, thank you, Influence, for having me. I'm so grateful and honored that to be among the amazing presenters on your AI Global Frontier Summit 2025. So thanks so much. You guys are amazing to work with, and their Influence is doing incredible stuff in the space. So be sure and check out their website and the rest of all the goodness that they are responsible for over there. All right, so we're going to talk today about a new magic bullet for conscious capitalists, how AI-driven stablecoins increase shareholder wealth and financial inclusion. That is a big mouthful, so let's get into it and break it down a little bit. First of all, why am I the person to be talking with you about this? I'm a writer, content strategist, and consultant for emerging tech companies. I've been fortunate to have engagements with some pretty big players, grateful for that. But my heart really lives with the impact space, has for my entire career. So through my newsletter, TrustRenews, I help progressive leaders understand the benefits of AI, blockchain, stablecoins, these emerging technologies, especially for scaling women's financial power. I chose that topic because financially empowered women are the engine of a global renaissance, and AI-driven stablecoins are a major opportunity. So let's talk about what that looks like. Also, my contact information will be on the last slide in this presentation. Okay, so the question we're looking at today is, can companies increase shareholder value while scaling financial inclusion? A spoiler alert, answer. I'm going to give you the answer, but don't go away because we're going to talk about how it works. The answer is yes. I'm excited that I had to tell you first, because AI and decentralized technologies like blockchain make legacy barriers to financial inclusion obsolete. What do we mean by that? Yeah, we'll talk about what we mean by that. But first of all, we have to talk about the problem. So the financial inclusion gap, it's narrowing, but it still exists, and it's still way, way too big. Estimated 1.4 billion adults are unbanked globally, and women are 6 percentage points less likely than men to have an account among those that are unbanked. 740 million women globally lack access to formal financial services, and 1 in 3 adults globally lacks access to credit. Now, as you can imagine, all these unbanked folks are not evenly distributed throughout the globe. They are clustered in economies that are emerging, in poverty at times, and so it can be really challenging for them. So there's a dilemma, the profitability dilemma for traditional finance, okay? So traditional capitalism centralizes wealth and prioritizes growth in shareholder value above all other things. And companies achieve this a few ways, but a couple of those are via efficient growth and externalizing costs. As a result, billions remain unbanked or underserved, not because traditional finance is really bad. I'm not here to make a value judgment. They are for-profit institutions, though, usually the banks and service companies. So they are serving shareholders and not sometimes at the expense of their customers. And the traditional financial model has no efficient way to serve the unbanked because it's small transactions, it's lots of transactions for very small amounts of money, which leads to higher costs for the traditional finance organizations that might be trying to process those. Oops. And TradFi also has some outdated legacy. I mean, even in economies like the United States, it's still, you can feel that there's a friction, there's a drag there. And what do I mean by that? Well, say you get paid on Friday, or Friday's payday. This actually happens to me. I have a client who pays on the 1st and the 15th. Well, the payment goes in, it doesn't hit my account until the next day, as long as that, and if it's a Friday, then I don't see the money till Monday, and then if Monday's a holiday, I don't see it till Tuesday. So it's ridiculous. So why isn't that money just right there immediately? And maybe you've experienced something similar. Um, in general, though, there's a lot of high fees and friction in transactions in legacy traditional finance. Cross-border payments make it even worse. They cost 3 times more than domestic. There's a lot of fees and regulations. There's money laundering regulations, a lot of things that can slow down settlements from 1 to 5 days or more. And again, physical banks are closed on weekend and holidays, and they've tried to overlay that onto internet transfers of money. So the opportunity for conscious capitalists, let's look at this. And here's some signals that the time is right for a more inclusive financial world. So consumers want brands to have a social impact. And over 75% of millennials and Gen Z will pay more for sustainable products. 84% of US investors are interested in sustainable investing, which is pretty incredible. And women's financial inclusion, there's a lot of data out there and research that shows that when women have more money in their pockets and more money access to financial tools, they tend to increase savings. They're more resilient to financial shocks. They spend more money in their community. They spend more money on their kids. It just is a big benefit to their community overall. So AI for financial inclusion. Here's a real world example. Now, I love India and Africa. I mean, I love the entire world, but I live in the Western Hemisphere and I've had to focus. And I've also lived in Mexico for a while and I love it there. So my focus currently is on financial inclusion in Latin America. And that's why we're going to, and I also found a great little study about it. So that's why I'm talking about it here, to give you an overview of how AI can make a difference. And then we'll get back into the stablecoin question. So AI is expanding access to credit, insurance, and payments in Latin America. And 47% of Latin American companies are already using AI, and 40% are exploring it. That was 2023. That number is probably higher now. This a source of this information is the Development Bank of Latin America and the Caribbean. And if you would like a link to it, hit me up later via email or LinkedIn, because I'll have links to all these sources that I'm quoting. Underserved groups like women, migrants, and small farmers are now gaining access to financial services because AI has injected the system with more efficiency, so it's less expensive for the financial service providers to serve lower income people. That means that CAF and major partners like Google and Microsoft are backing startups using AI for financial inclusion across their region. So it's really exciting times and lots to feel hopeful about in that space. Okay, let's get back to stablecoins and artificial intelligence. And we'll talk about what a stablecoin is in a minute, not in a lot of depth, but if you're not quite sure, we'll clear that up in just a second. So, but first of all, what if there was a tool that could profitably serve unbanked or excluded markets, people in those markets? And of course, I've given you the answer since the beginning. The tool is a stablecoin. And if you add AI to stablecoins, you add extra features that allow it to perform even better: speed, programmability, and global reach. The business incentives for looking at this idea. So there's access to untapped markets and customers, lower compliance and transaction costs, improved brand equity and trust, and you enable profitable impact at scale. Okay, what is a stablecoin? Well, so basically a stablecoin is a cryptocurrency that pegs its value to the US dollar. Why does it do that? It does that because, as you probably know, cryptocurrencies, especially Bitcoin, are especially volatile. So they had to figure out a way to smooth out that volatility to increase the utility of some form of crypto. So that's what a stablecoin does. They were invented to be used as a cryptocurrency that pegs its value to the dollar so that you could use those stablecoins in a way and not worry about if Bitcoin was going to go up or down by, thousands of dollars overnight. So they you can also, so most stable coins are pegged to the US dollar, but they can also be pegged to gold or other currencies, hopefully stable ones, right? Like the euro. But um, just so you know that you can peg a stable coin to any um, stable asset. Okay, again, designed to reduce volatility. And if you're familiar with currency pegging, it's a good analogy, is when a company with a struggling economy and a lot of volatility in their fiat currency will will peg their fiat currency to the US dollar. Same idea with a stable coin. Only it's a cryptocurrency that's value is pegged to the US dollar. The most common examples of stable coins right now are Circle's USDC and Tether's USDT. So how they work is, I'm not going to explain the mechanics of it, but I'll explain the overall process. So the sender has their money, say it's a Mexican worker in the US, and he wants to send money back home to Mexico. He uses his phone to app on his phone or exchange or a digital wallet to convert his fiat money to stable coins. And then he transfers the stable coins to the recipient. They receive them, and then they can transfer them to pesos. There's no bank involved. The fees are much lower, and it happens almost instantly. That is an example right now of something called a global remittance. What I just described is a global remittance, like a remittance. If you probably know what those are, but if not, it's just money that a worker in one country sends back to his or her home country. And the stable coins offer an opportunity for lower fees and access without bank accounts. Now, if you remember the first slide about the unbanked folks, not needing to have a bank account is game changing. So that's a innovation and really good news in the space. Circle's USDC has processed over 12 trillion in transactions since 2018, and it's more than that now because this number is through 2023. That's not all remittance payments, but just to give you a sense of the scale of what we're looking at here, stablecoins made up 60% of crypto volume in February 2024. And the World Economic Forum recognizes them and as helpful and encourages regulated stablecoins to boost equity and financial stability. Okay, so how do AI and stablecoins work together? That could be its own presentation, but so we're not going to get super deep in the weeds, but just know that AI handles the logic. AI can increase optimization of handling risk. It can ferret out fraud. And it also, AI can enable programmable customization like micropayments and automated rewards. It can augment that programmability that stablecoins inherently have. Stablecoins execute global real-time payments, and they can enable automated business processes that scale access. And in the near future, AI agents and not people will negotiate a contract and transact using stablecoins in real time. Like, so a company will have AI agents that they've designed them to have permissions to do certain things, and they'll be just transacting on the business or the person's behalf 24/7. So using women's financial inclusion as an example, stablecoins and AI-driven financial tools, they can enable direct income access for women in informal or gig economies so that they can be paid more easily. It doesn't have to go through a bank. It can happen instantly via phone app. They reduce dependence on intermediaries, speaking of banks, or male family members for financial transactions. They can deliver deposits, microloans, remittances, and insurance directly to mobile wallets, even in countries with restrictive regimes. So they can be a real game changer, helping to increase women's access to financial services in difficult situations. All right, AI stablecoins in action. Let's look at just a few numbers. So almost 670 billion in global remittance flows, and the senders pay about 53 billion in fees without stablecoins. Global remittance fees average in Q1 2024 6.35% of the entire transaction. So it'd be about $12.70 to send 200 bucks. The UN SDG goal is to reduce remittance fee to 3% or lower. That goal was set prior to the advent of cryptocurrency. So stablecoins already well undercut that, with fees ranging from 0.01% to 3%. The Stripe reports that the AI boom has driven 38% increase in payment volume. AI finds the cheapest and fastest stablecoin routes and rates. Stablecoin transfers reduce costs from about $10 to like a cent or less, about 99% decrease. And stablecoins could put approximately 50 billion back in the pockets of global workers. Here's a bonus use case for you. AI-driven microinsurance. I included this because it's something I don't hear a lot of people talking about, and I think it's kind of interesting. Insurance is a possible mega trend, and Robert Shiller at Yale University is a Nobel laureate. I took his online course and about for markets, financial markets. And he sees insurance as a fundamental institution for risk management and social good. And I really appreciated that reframing of it, because I've never really liked insurance and haven't seen everybody thinks it's just paying for nothing, right? But if you look at it from the perspective of Dr. Shiller, it's a different perspective. So AI dynamically prices policies for underserved populations. And this wasn't possible to do before in an efficient way. Stablecoin smart contracts automate low-cost payouts, and it opens up new markets and improves social resilience in those markets, which also has kind of a stabilizing effect for these emerging economies. Risk and regulation. So there are concerns, of course, AI bias. Is a stablecoin backed with appropriate reserves and anti-money laundering compliance? There's also, you got to think about, stablecoins are proxies for actual money, like the dollar, but they're not issued by the government. They're issued by private or public companies. They're issuing and controlling a proxy for public money and making billions of dollars doing so. So we have to kind of think about how that feels and how we sit with that. Regulation is evolving pretty quickly now, finally, but it's still uneven. And the Genius and Stable Acts are moving through U.S. legislative gauntlet. The European Union already has some stablecoin regulation under the umbrella of their markets and crypto assets regulation legislation. Sorry. All right, closing up here. We're looking at the dawn of a global renaissance. I'm an optimist, so I'm going to say yes, we are. The key to this whole idea is that emerging tech, this AI stablecoin dance, it improves lives and profits through innovation, lives and profits. Nobody's asking businesses to change their behavior, accept lower returns, or do the right thing. It's the AI and crypto is increasing efficiency and speed, which brings costs down and allows for more profits, and then also brings costs down for the customer. So basically, by increasing efficiency and speed, AI and crypto technologies they make the legacy excuses, oh, we can't serve that market because there's too many of them and they don't have enough money, and it doesn't work out for our company economics, right? Those excuses are now obsolete. No credit history, AI can assess the risk. No bank, crypto can deliver funds faster and cheaper. So the value can start to move to people, not just institutions. And it's kind of like the pie is getting bigger instead of having to be divided up in difficult ways. If you'd like to learn more, I highly recommend these books. So Broken Money is a book by Lynn Alden. I'm sorry, she just has one N in her name. That's a typo. check that out. It's a I if I was doing the marketing for that book, I would not have entitled it Broken Money because that makes it sound kind of dramatic. And actually it's just a really well written, clear history of money from the beginning to today. And also she was a crypto skeptic, and then she um, learned more about it, and now she is a not a crypto skeptic anymore. I don't want to say she's a crypto enthusiast, like she's not trying to talk you into things, but it's just a very measured, well-informed point of view. Check Your Financial Privilege by Alex Gladstein, another really great book about how money really works in developing countries and authoritarian governments. Great book. And then I actually wrote The Crypto Skeptic's Intro to Stablecoins, which is a basic overview of what stablecoins are, how they function, and it's like a big expansion on what we just covered in this presentation. All right, so thank you. If you have any questions, collabs, I'm happy to hear from you. My email is here, Kayla@KaylaPhilo.com. We can connect on LinkedIn. I'm easy to find there because I'm the only Kayla Philo on LinkedIn. I'm the only Kayla Philo I know, actually. And also, you can subscribe to the TrustRenews newsletter on Substack. I would love to hear from you. Again, if you would like links to the sources and statistics to use in this presentation, email me and I'll send you those. All right. Thank you so much for joining me. I really appreciate it. I hope you have a fantastic rest of the summit.